Good morning. Welcome to the market opening bell on Thursday, May 15th, 2025. Seven Chinese ministries jointly issued policies to accelerate the development of science and technology finance to strongly support high-level scientific and technological self-reliance, proposing the establishment of a national venture capital guidance fund to promote the growth of tech enterprises. The policies also emphasize leveraging technology insurance as a buffer and stabilizer for innovation, formulating guidelines for high-quality tech insurance development, and encouraging insurance capital to participate in major national tech projects. Driven by Chinese tech and finance stocks, Hong Kong stocks rebounded on Wednesday. The Hang Seng Index opened 208 points higher and closed at its daily high of 23,641, up 532 points or 2.3%. The X-share index rose 206 points or 2.5% to 8,593, and the Hang Seng Tech Index gained 112 points or 2.1% to 5,381. Total market turnover was 222.8 billion Hong Kong dollars. Southbound funds net bought $6.707 billion in Hong Kong stocks, including net purchases of Tracker Fund, $5.241 billion, China Construction Bank, $761 million, Ping An Insurance, $298 million, and China Mobile, $109 million. But net sold Xiaomi, $1.544 billion, Tencent, $899 million, SMIC, $400 million, and Meituan, $113 million. Southbound funds have net sold Tencent for 7 consecutive days, totaling 9.992 billion Hong Kong dollars, and Xiaomi for 7 days, totaling $7.803 billion. Technical analysis: the Hang Seng Index fell over 400 points on Tuesday, a normal pullback after Monday's nearly 700-point surge. After completing this short-term correction, the Hang Seng Index resumed its uptrend with upside targets at 23,900 and 24,500 and support levels at 23,200 and 22,800. The Shanghai Composite Index reclaimed 3,400, closing at 3,403, up 29 points or 0.9%. The Shenzhen Component Index closed at 10,354, up 66 points or 0.6%. Combined turnover in Shanghai and Shenzhen markets was 1.3166 trillion yuan, up 25.1 billion yuan from the previous day. The renminbi-US dollar central parity rate rose for the third consecutive day to 7.1956, up 35 pips, hitting a 1.5-month high. After the onshore market opened, major Chinese banks heavily bought US dollar, pushing the price to 7.21, reflecting authorities' reluctance for significant RMB appreciation despite a temporary pause in the US-China tariff war. The People's Bank of China reported that renminbi loans grew by 10.06 trillion yuan in the first 4 months of 2025, below market expectations of 10.4746 trillion yuan. April's new renminbi loans were only 280 billion yuan, far below the median forecast of 700 billion yuan, and the lowest since July 2024. March saw 3.64 trillion yuan in new loans. Social financing scale increased by 16.34 trillion yuan in the first 4 months, below expectations of 16.5771 trillion yuan, but 3.61 trillion yuan more than the same period last year. April's social financing increment was 1.16 trillion yuan, below expectations of over 1.2 trillion yuan. By April's end, broad money M2 grew 8% year-on-year, exceeding market expectations of 7.2%, while narrow money M1 grew 1.5%. Tencent announced its Q1 2025 results after market close, with revenue of 180.022 billion yuan, up 12.9% year-on-year, surpassing the forecast range of 175 to 177.1 billion yuan. Net profit was 47.821 billion yuan, up 14.2%. Under non-IFRS, Q1 net profit was 61.329 billion yuan, up 22% within the forecast range of 58.1 to 64.054 billion yuan. By segment, value-added services revenue rose 17.2% to 92.133 billion yuan, with domestic gaming revenue of at 42.9 billion yuan, up 24%. Marketing services revenue grew 20.2% to 31.85 billion yuan, driven by strong advertiser demand for WeChat Moments, mini programs, and WeChat search ad inventory. Financial technology and enterprise services revenue reached 54.907 billion yuan, up nearly 5%. Alibaba, NetEase, and Geely Auto will release results today. Alibaba's revenue for the fiscal fourth quarter ending March 2025 is estimated to grow 6.4% to 236.1 billion yuan, bringing fiscal 2025 revenue to 1.0005 trillion yuan, a key milestone. Net profit attributable to shareholders is expected to surge 68.7% to 134.5 billion yuan. Gross margin is projected to expand from 33.3% to 37.2%, reflecting improved cost structure and operational efficiency. Markets will focus on management's guidance for Q1 2026, particularly revenue forecast, margin expectations, and AI expansion. Alibaba has committed to investing over 380 billion yuan in AI and cloud infrastructure over the next 3 years. NetEase Q1 2025 net revenue is expected to range from 27.772 to 29.522 billion yuan, up 3.4% to 9.9% from last year's 26.852 billion yuan. Net profits is projected at 7.596 to 8.111 billion yuan, down 0.5% or up 6.2% from 7.634 billion yuan. Non-GAAP net profit is estimated at 8.615 to 9.314 billion yuan, up 1.2% to 9.4% from 8.511 billion yuan. Investors will watch whether core games like Fantasy Westward Journey maintain stable revenue. The launch timelines for Destiny, Rising, and Marvel Mystic Mayhem, progress on Ananta, and recovery in Youdao and advertising businesses. Join us at 4:15 p.m. today for a live broadcast on June Hong Kong stock strategies and Green Tea Group's grey market trading. Stay tuned. U.S. stocks were largely subdued on Wednesday as investors awaited Federal Reserve Chair Jerome Powell's speech scheduled for Thursday, along with the release of April's Producer Price Index and retail sales data on Thursday morning. The S&P 500 rose 6 points or 0.1% to 5,892, while the Dow Jones Industrial Average fell 89 points or 0.2% to 42,051. Tech stocks gained after the U.S. government announced AI-related deals with the Middle East on Tuesday, boosting the Nasdaq, which climbed 136 points or 0.7% to 19,146. The China Golden Dragon Index, reflecting Chinese ADRs, rose 87 points or 1.2% to 7,530. Nvidia surged 4.2%, topping the Nasdaq components. AMD announced a $6 billion stock buyback program and Middle East partnership before the market opened, driving its stock up 4.7%. Supermicro Computer soared nearly 16% after partnering with Saudi Arabia's Data Vault. Boeing gained 0.6% after signing a $200 billion deal with Qatar Airways to purchase 160 aircraft. The White House stated that President Trump secured deals worth over $243.5 billion with Qatar, laying the foundation for a broader $1.2 trillion economic commitment. Qatar was the second stop on Trump's Middle East trip, aimed at securing deals and boosting investment. OPEC's Wednesday report forecasted global economic growth at 2.9% for 2025, down from last month's 3% prediction, citing U.S. economic contraction in Q1 and ongoing trade uncertainties, partially offset by additional support measures among major economies. OPEC projected global oil demand growth at 1.3 million barrels per day for 2025, unchanged from April, with total demand averaging 105 million barrels per day. For 2026, global oil demand growth is also expected to be 1.3 million barrels per day, consistent with April's forecast. Our stock pick today is CALB Group, stock code 3931. CALB Group primarily engages in the research, production, sales, and market application development of lithium batteries, battery management systems, related integrated products, and lithium battery materials. As a battery expert, the group is committed to building a comprehensive energy operation system, providing complete product solutions and full life cycle management for new energy applications, including power and energy storage markets. The group continuously pursues high energy density and stable safety performance for power batteries, launching more competitive ternary and phosphate-based products while deeply engaging in application scenarios such as power storage, industrial and commercial storage, and residential storage. According to SNE Research, CALB Group ranked fourth globally and third domestically in power battery installations in 2024. Per InfoLink data, the group ranked fifth globally in energy storage cell shipments in 2024. In the passenger vehicle market, CALB Group supported over 2 million new energy vehicles last year, with cumulative deliveries exceeding 100 gigawatt hours. In the commercial vehicle market, domestic installations grew 85.2% year-on-year in 2024, achieving full coverage of mainstream products, comprehensive scenario enablement, and complete entry of strategic clients with full model support and mass deliveries. International deliveries also steadily increased. In the energy storage market, CALB Group achieved significant shipment growth last year, with its 314AH cell product being the first in the industry to achieve large-scale stable mass delivery, earning high recognition from strategic clients for product and delivery capabilities. It also secured the world's largest energy storage battery order in 2024. In the first quarter of this year, CALB Group reported revenue of 6.896 billion yuan, up 42% year-on-year, and net profit attributable to shareholders of 230 million yuan, up 36.1%. Earlier this month, CALB Group announced it would acquire an 11% stake in listed company Jiangsu Olive Sensors from its controlling shareholder Li Hongqing for 511 million yuan. Li currently holds 36.55% of Jiangsu Olive Sensors. Additionally, CALB Group will subscribe to up to 119.5 million A shares of Jiangsu Olive Sensors through a non-public offering, increasing its stake to 22.61%. After the transaction, Li will waive voting rights for 19.55% of his remaining shares for 5 years, allowing CALB Group to gain control of Jiangsu Olive Sensors, becoming its controlling shareholder and actual controller. Jiangsu Olive Sensors specializes in providing high-quality components and services to automotive manufacturers, with main products including sensors and accessories, fuel system components, automotive interior parts, and emerging new energy components. Its subsidiary, Bonnier Automotive Electrical Systems, produces components for automotive thermal management systems widely used in air conditioning, engines, motors, batteries, and electronic control modules. CALB Group believes this acquisition aligns with its development strategy, leveraging its resources and advantages in the new energy and automotive supply chain to empower Jiangsu Olive Sensors business and enhance the value of both parties. Recommendation buy at 117.6 Hong Kong dollars, target $19.6, stop loss at $16.6. I do not hold the above stock.